Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is January 20th, 2011. This morning I'm talking about the Chinese juggernaut. And what I mean by that is the Chinese economy, which earlier this morning reported a slew of economic data that shows that their economy is still cranking along at a healthy clip. I just want to run through and give you some of the numbers here so you can really see how well they're doing. All right. GDP figures came in for the year at 9.8%, all right, showing that they grew their economy 9.8%. All right, just to give you an idea, that's roughly 3 times the next major economy that's out there. If you look in the U.S. forecast for this year, around 2-3%, and personally, I think that's a little bit optimistic. CPI data came in 4.6%, showing that's the type of inflation that they have right now. Here in the U.S., roughly half that. All right, industrial production figures up 13.5%. There's just an incredible economy that's going on over there, and the growth is just spectacular. But what that's actually done is that's actually been a case this morning of maybe this is a little bit too good, and the market looks at this, and everyone's been talking about China and how they grow and what they're doing and currency manipulation and tariffs and all these other things, but people lose sight of the fact that this economy is really driving the global recovery right now, and any disruption to it could potentially affect a lot of economies around the globe, and that's what we're seeing this morning. We see the Aussie down, all right, we see the Kiwi down. I'll just show you the Aussie here, Aussie versus dollar, all right, boom, daily chart. You can see right there was that parity, boom, selling off. Why? Because China is the largest importer of Australian exported raw materials. Okay, same thing with the Kiwi. We're just going to look at the Kiwi here real quick. All right, I just put up a little Fibonacci retracement line here to show you top to bottom from its recent swing highs in November down to the lows in mid-December. All right, you can see that it's pulled back. It's sitting right on the first 38.2 retracement level here. But also, they are selling off for the same reason as the Aussie, but they also have a little bit of weakness as well because they had CPI data that came in lower than expected, just slightly. So it came in around 4%, while that's still a pretty high number. The market prices these things in what their expectation is, and if the expectation comes in a little bit lower than where the market thought it was going to be, then perhaps there's a thought that the RBNZ may not have to raise rates next time. So in my opinion, the inflation's still a little bit high there, but we'll see how that plays out. So what's happening now is that money flows are moving into other countries around the globe. Okay, we've got dollar strength and yen weakness. That's a big one this morning. Just take a quick look there. All right, dollar strengthening versus the yen. We have euro strength. All right, euro's up against everybody but the dollar, and actually it looks like it's turning itself around here. Let's look at this on the 5-minute chart. We can just see here, yep, a little bit more euro strength here, and then also the pound. Now in the eurozone, we've got in Germany, they've got PPI figures that came in a little bit higher than expected. So that could be showing that there is a little bit of inflation in that region's largest economy. So that's going to be important to keep an eye on as far as rate policy goes for the ECB. All right, pound's also getting some money flows as well, just lower versus the euro. Right there you can see, and also versus the dollar. Now, I just want to get back to the idea of yen weakness here. Okay, you can see that dollar on the 5-minute strengthening versus yen, and this really is a function of the global dynamics of where these currencies are located. China is the largest importer of raw materials from the antipodian currencies. Those are Australia and New Zealand. Okay, also Japan exports a lot to China, so that's actually affected their stock market as well. What we're seeing is that we have commodities lower this morning. Okay, gold selling off. We have oil prices lower. All right, and that really is taking into account this global slowdown story because everyone thinks China's overheating and it's moving too fast. Well, let me tell you something, folks. China's been moving at this pace for some time now. All right, this isn't the first year that they've expanded like this. They've been averaging double digits growth for probably the last 5 years or so. All right, so every time this happens, people say, well, now they're going to slow down. They couldn't possibly sustain this level. You know what? I've been hearing this story for 5 years, and quite frankly, at this point, why would they change? Okay, sure, they have problems with inflation there, but you know what? They've got such a surplus of currency reserves, that they could actually go out and subsidize this for a while and let this play out if they want to. I mean, people forget that this is a communist country. People talk about all the buildings that are have been erected that are empty in these ghost towns. Well, you know what? They could just move people right in if they wanted to, do a government takeover, and boom, now you have an existing city. So they clearly have a plan that they're following. And just because it doesn't fit in with what everybody else is doing, everybody just assumes automatically that it has to pull back. So they've taken minor steps to try and slow the economy. All right, let's increase the bank reserves, so that'll curtail lending. And you know what happens? The banks lend more anyway. They haven't really taken any meaningful steps to show that they're serious about trying to slow down the economy. So at this point, I'm inclined to say, you know what? I think the market's got it wrong today. Just because those numbers are fantastic and everybody assumes that they have to slow down, until I see it start happening through meaningful measures, then I'm inclined to say it ain't going to happen. And we can go back, over the last 5 years, and you can see this. They've been on this trajectory already, and why should they change if they don't have to? I mean, it's not going to be until everybody gets together and forces change that anything's going to happen. Just tell you real quick here in the U.S., we had initial jobless claims come out this morning. They came in a little bit better than expected, showing only 404,000 people lost their jobs versus an expectation of around 425,000. So we need to get back into the threes to really show some, meaningful recovery happening. And we're going to see, because, I think sentiment here in the U.S. is a little bit better about economic prospects, because of change in Congress we had now. We've got more of a balanced government. All right, people are seeing that, perhaps there's going to be more sensible economic policies put in place. And, you're starting to see that already with the tax compromise. All right, now they're going to go back and review the financial regulation bill. So there could be some positive things coming out of this. So, that's kind of what we're looking at today. We've got money flows leaving the speculative currencies, and they're, flowing back towards the dollar. We have people fleeing the other Pac Rim countries' currencies. Okay, as the sentiment there is that if China slows down, that's going to hurt those economies as well. So that's what we're looking at today, folks. Keep an eye on the story going forward. One of the interesting things I mentioned in the blog, in the written blog, is that perhaps the dollar is going to strengthen as a result of its peg to the Chinese yuan. I mean, people talk about, they've got this peg and that keeps the yuan low. Well, the only reason the yuan's low is because the dollar's low. So maybe if people expect that the yuan should be higher, maybe that's actually going to drag the dollar higher, and we're going to see how that works this year going forward. But that's what I'm looking at today. If you're not involved in the currency trading market, I highly suggest you do, because these are the stories that are driving global growth and global wealth. And if you're not in tune with what's going on, you just may be missing the boat. So that's all, folks. Have a good, happy trading day.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.